With all the bad news going on in the world, we have some good news.
Bad news is good news sometimes.
And sometimes you got to have bad news to make rates come down, and we'll tell you what's going on in the marketplace right now. Hello everybody, my name is Barry Horvath and this is Moving Forward TV with your local market update.
And I am DeLynn Gaston. Thank you so much for joining me. So was I like fixing my hair when the show started? Because I think I was still, sorry about that.
Your hair looks near perfect today.
Thank you, near perfect.
Actually the producer even made a comment. Wow, you're having a good hair day, DeLynn.
It's my new highlights that I just love, yes.
Yeah, good.
My new highlights. So anyway, so we are talking about on to other things besides my hair.
So basically we've used up the first 30 seconds of our show to talk about DeLynn's hair.
Which is beautiful.
Operation Normal. It's no wonder people love and enjoy watching our show. Yeah. Anyway.
I'm sure they do. Hanging on the edge of their seat.
Yes, they do. So you want to talk about the markets and things going on?
Markets and the things that are happening.
How it's affecting the housing market.
So yeah, I thought it would be pretty timely to kind of talk about what's going on. Obviously, last week the stock market went nuts, right? I mean,
nuts in the wrong way.
In the wrong way, almost 2,000 points.
Yeah. So, and that's that's actually normal. That's a good, healthy correction in the market.
I don't think other people realize that. So let's touch on that for a little bit. So why is 2,000 points normal, Bear? The rest of us are chewing off our fake fingernails, watching our 401k slip away.
So let's talk about this, okay? First of all, the market cannot go up every day forever, okay? A typical stock market volatility, normal volatility is, you take 3 steps forward, you're going to take 2 back. Sometimes you take 4 back, sometimes you take 5, then you take 10 forward. But your overall direction is going to be up. You need to have normal corrections because if we don't have these cycles where it comes back, inflation's going to run crazy.
There you go.
The price of everything will go up.
I don't think people realize that.
Yeah, and as far as your 401k, if you want to talk about that, you're buying and investing in your 401k every single month. So think of it this way.
We're getting in at a good price right now.
Yeah, things are on sale. Your goal, for the long term, is to accumulate shares. I mean, obviously, if you're a short-term investor, maybe that's not suitable for you. But yeah, this market
the jump in, jump out people are probably getting hurt a little bit.
Yeah, but if you're buying every month and holding, that's prudent. So, but it does affect the impact of mortgage rates, which we do.
And the last thing people should do on anything in the stock market is jump out right now, right?
Well, that's a whole
Isn't it time to buy? Probably another show. Never mind.
You can't give investment advice to people without knowing because that's just not suitable. Anyway, because you don't know anything about
the advisor in him is coming out.
It is. So always playing it safe. But we really want to talk about how it ties in with interest rates and mortgage rates and what's going on there. So, typically when you see the stock market pull back like it did in a normal cycle, people move from stocks and they head to bonds as safer haven. And if you know anything about the bond market, which I know you do because you look at that stupid chart every day. So if they're coming out of stocks and going into bond for safer haven, the bond market goes up. And typically when the bond market goes up, interest rates are going to naturally come down. That's just the cycle of the way it works.
Mortgage interest rates.
So, so if that bond pushes up, we'll have favorable rates like we do right now. I mean, we're in historical lows for mortgage rates right now. And crazy lows.
I know, and we have been for a while. So, and I totally agree with you. There's probably some correction that's coming. I don't think it's, you never know. I can remember a few weeks ago we were doing a show on, the predictions for the year, for 2020, right. And it was rates are going to go down. I don't think anybody anticipated them to drop quite this fast. And I do think that there's probably going to be some correction. Mm-hmm. So like Barry was saying, the mortgage interest rates are basically tied to the bond market. So these are mortgage-backed securities sold on the secondary market, and that's kind of what drives the mortgage rates is the bond market. And it normally, like he said, runs opposite of the stock market, but in instances like what's been going on in the last last week was definitely out of the norm.
Yeah, it's a great time now for a consumer that's looking to purchase a home right now. When interest rates drop like they do, I mean, two things can happen. Number one, they can enjoy a lower monthly payment, mm-hmm. and number two, they can maybe purchase a little more house,
right? Because
their payment's lower, so they will qualify for more mortgage.
Exactly.
And, that's the good news of all this bad news thing.
Right.
And some of the things, as you know, and the bad news going on right now is this coronavirus.
And before we jump to the coronavirus, just so that you guys know, so sadly, and it's a little odd that when bad news happens, that's why we said in the beginning there, bad news sometimes is good news. The markets, I've been saying and watching the markets for 100 years now, and how it affects mortgage rates. And when something bad happens, that seems to be when the mortgage rates go down. So bad stuff happens and the mortgage rates go down. For example, I used to say fact based on theory. So all of the economists...
Your favorite saying.
My favorite saying, he's heard me say it a million times. So fact based on theory. All the economists out there are predicting what's going to happen. Well, if the housing starts go up or if the housing starts go down, we're estimating the number is going to be this. And then when the actual number comes in, if it's off from what they were predicting, the whole market goes into a tizzy. And that's with the consumer price index, the producer price index. Keep in mind, we are a global economy, so everything that's happening around the world affects these markets. And again, it's, the economists are predicting this is where this number, the consumer price index number should be, or the unemployment numbers should be here. And if it's not, oh boy, step back and watch it tumble because, it goes crazy. So if more people are unemployed and they didn't anticipate that, the mortgage rates are going to
if we,
be affected.
It's going to affect a lot of things, and you talked about the job market. As
Mm-hmm.
long as this job market is stable, which unemployment as it is right now is at a historical low. So that gives stability to the market. When there's consumer confidence, which we already know on some reports, it's maybe slipping a little bit because of things like the coronavirus.
Exactly.
People start to panic. But, the funny thing is I've talked to many agents, and I know you do too, and look at the inventory. There's so little inventory on the market right now, and the prices continue to go up. So, for people sitting on the fence right now thinking about buying a house, even though your buying power will go up, you have to remember the price of the house you're looking at this year maybe.
And we've been saying this for the last few years.
And it's been true.
And I was going to say, and we've been dead on. Up. It keeps going up.
And what's so funny is some of these lower income borderline borrowers will no longer qualify for a house.
I know.
Which is sad. The lower cost housing is not out there. And then, of course, when the price of housing goes up, we all know that rent prices are skyrocketing. At least with a mortgage, the one thing you can say as a safety net is if you bought a house 10 years ago, your mortgage is at so much. And if the market continues to go up, your mortgage feels low.
Yes.
Because everybody else
compared
is
to
paying
what you
more.
Could get.
Yeah, for the same house. Even though you could sell your house and get more money, you've locked in on, say, a 30-year fixed rate mortgage that payment is going to stay steady. Now, can taxes go up? Yeah, but we know in Pasco, we know about the caps that are in place
save our homes.
So you're not going to lose your house. But insurances have been coming down. So, homeowners insurance.
But it's not going to change as much as if you were renting.
Right, and a rental, you're almost guaranteed
you're going to go up $100 a year
or
at
whatever
least,
it may
I would
be,
say.
whatever,
Right.
depending on the rental amount. So, so it's a good time to look at buying a home if you want to lock in and be stable. I mean, when I say buy a house and I'm moving next year, no, you don't want to do that because your closing costs, et cetera, are going to,
Sure.
hurt you in that case. But if you're going to be there for a couple, 3, 4, 5 years, why not lock in on something that's affordable today? So, it's funny. The one thing I want to talk about is that this impact. All right, we lost $1.7 trillion.
I know. Is that
last
crazy?
week in the market? $1.7 trillion.
Trillion with a T.
Now, is that wealth that people really had? No, it was on paper. Okay, did you cash in your 401k?
No.
Did you?
No.
No. So you lost it on paper. Will it be back? Probably. May it take some time to come back?
Probably.
Probably.
But like you said, it was a correction that was necessary.
Yeah. So, but here's the fact: loan applications in January were up 6% over the prior year. So what does that tell you?
And that's for purchases.
That's for
purchase
purchases.
applications.
Yeah.
Refinances were actually down a little bit, but I kind of attribute that to the holiday and everything. Everyone's kind of like still coming out from underneath. But purchases are back up. So again, everybody kind of takes the holidays off around December. Boom, in January they hit it hard and they're buying houses.
And you know what? The number one reason that people refinance is to consolidate debt, because usually during the holidays they run up their credit cards.
So in the spring,
so then they're like, oh, I got this credit
the second or third month into paying this credit card bill, and they're saying, ouch, this is crazy.
Yeah, so let's consolidate, get cash out, pay it off at a lower rate, spread it out.
It's funny, about that, as years ago, somebody had said something like to me, well, I have all this credit card debt, but I don't want to take a loan out to pay it off. And I said, you already took a loan out. I'm just showing you a better way of paying it back than, 24% interest on your credit card. Yeah, I know. I don't want to take a loan out. You already did it. Too late.
That's funny. But you know what? Refinances may have been down for January. February, I expect a surge because the rates are lower.
February and March, I do expect a surge.
Because those people in the mid 4s and 5s now, it may be time to consider looking at refinancing because, if you got a bigger loan size, shaving a half a point is a big deal. Anybody who's an expert that comes out and says, oh, it doesn't make sense to refinance your house unless you lower it 2 points is full of malarkey. I mean, who are you listening to?
That is so old. They used to say that back in the 80s.
Yeah, it's like, what do you mean you got to shave off 2 points? If I'm shaving off 1 point...
And everyone's situation is different.
Exactly. 1 point...
If it's helping you.
I know. 1 point on a $300,000 loan is $3,000 of interest the very first year.
Right.
Why doesn't it make sense to maybe look if you can shave a point off?
Right.
1 point on a $200,000 loan is $2,000 interest. Simple math, but everybody's situation, like you said, is different.
Everybody's situation is different.
And people are loving, they want to put a new roof on. They can put a new roof on. They want to remodel the kitchen. They want to update the bathroom.
And with the property values going up, they now have the equity in the home to do that.
Right.
So,
instead of trying to move and pack all that stuff up and who wants to get rid of all that stuff anyway?
Who wants to move?
Nobody.
Nobody wants to move.
Nobody.
Unless, of course, you're buying a house. And then, of course, yes, you want to move into that new house.
So you want to talk a little bit about the effects of bad news and the coronavirus and what's going on with all the cases? Because that's... it's the root.
And that's what I was going to say. So normally what makes the market swing up and down, as I said, it's the economists and their predictions and what's happening in the global economy. This whole coronavirus, believe it or not, is hugely impacting mortgage rates right now. It's because it's impacting the whole world. Keep in mind, we are global. So it's impacting, even though it's over in China and now in Japan and Italy, had more deaths, unfortunately. So this is impacting the entire world. And obviously, because of that, impacts the whole global economy as well.
I think people forget that people overseas and some of the biggest investors are here.
They don't realize that.
Yeah, and even though there are, there are some cases already reported. The U.S. is going to be impacted by this, no doubt.
No doubt.
To what extent? There's a shortage of the masks that they wear in the hospitals now. That's another concern that's going to prevent, from the staff from getting it. There's a lot of things that impact it. And the fact that, people get on an airplane and travel. What country was it that said they don't want you standing more than 4 feet from somebody? I think it was in Beijing they said that.
Beijing orders that in supermarkets they're making customers stand at least 4 feet away from each other.
Well,
how crazy is that?
So you got to stand 4 feet away from, so you're not going to spread this disease. I get it. And then
I wouldn't be going to the stores at all. Apparently they don't have.
Japan actually canceled all the major sporting events and cultural things that they normally do before the Olympics because they don't want this thing to spread.
And all the flights that were canceled, like you started saying before, people get on airplanes and all the flights that were canceled and everything. So you think that doesn't have an effect on the global economy? Of course it does. The other thing is the manufacturing. Over in China and Japan and stuff, they're telling people stay home. They don't want them to come to work. Well, when they stay home, what happens? Manufacturing is not getting done. So the little nifty parts for our cell phones or whatever are not getting manufactured, which is going to mean they're not getting over to the United States. They're not getting sold. That affects all of us.
Right. And is it a panic? Maybe. It probably is. Is the media hyping this up? Yeah. Or a lot of the people don't realize that, on the third day of the market, was it humans selling off? No, it's computers. It's computers buying blocks and trades of these stocks and, and they're buying, they're selling, they're buying, they're selling, they're buying, they're selling, they're looking for those dips and so forth. So that affects it.
And that puts the market into a tizzy. People seeing that going on, I better jump in too.
Yeah. And I'd like to say your amateurs panic and get out, But the things everything you're saying makes sense because it can have an impact. Is it going to have that big of an impact? We don't know at this point. There's no way to know.
So here's the other thing. They were saying on the news the other day that.
Oh, so it must be true.
Must be true. The SARS virus from. A few years back, several years ago, that was way worse than the coronavirus. I just don't think that it was as, talked about, broadcast as much, panicked about as much, but it was twice as bad as this one is right now.
Right.
And we made it through that one economically.
Sure.
And again, that affected the entire economy.
But there was a scare, like you got on a cruise, if you had a cough or anything.
Well, look what they did to those ships, those poor people who were stuck in Japan or wherever it was for 2 weeks.
Kept them quarantined. I mean, I get it. But I think what's different today is social media. It's
a lot more.
And people are more aware. When something happens over in Japan, we all know about it. It just happened minutes ago. Boom, we already know about
Instantly we know about it.
It wasn't that way so much when SARS came out. You heard about stuff. So if something happened during the day, it wasn't at your fingertips like it is today.
And I don't think there was as many online investors as there is today.
Well, sure.
There's all of a sudden everybody, you can do it yourself, E-Trade and all that stuff. And several years ago, that wasn't as, you went through your broker or whatever.
Right.
It wasn't as many people doing it. It was around, don't get me wrong, but not as many people. And I think, like you said, the computers are buying and selling, buying and selling, buying and selling.
The computer models do it.
The people jump in thinking, oh my God, I better jump in and do this too.
Well,
it sets the market off.
Sure it does. Yeah. So let's talk a little bit about more the SARS, because I've seen, since that's what's impacting us, I thought some of these were interesting.
The corona, not the SARS. This one's the corona.
Sorry, coronavirus. I went back to SARS. Man, that was a long flashback. I remember trying to get on a cruise ship, and there were people being turned away.
Because they had a sniffle?
If you had any sign of it, they wouldn't let you get on. I remember that. Yep. Anyway, so coronavirus.
I don't know that I'd get on the ship.
Yeah. Where do they keep you out? So we have the first confirmed case in South America, Brazil. I thought that was interesting. So it kind of shows you how it's spreading. South Korea, which has really been impacted now, 115 more cases, now a total of 1,261.
And they are beginning mass testing of over 200,000 citizens. Mass testing now, mandatory.
Yeah, so they're,
Yeah. Being proactive about it.
Yeah, absolutely. France now, second death reported there. Italy has had now 12 deaths reported.
And 9 countries in the Middle East have now confirmed cases.
Yeah.
That's a lot of countries over there.
Yeah,
Hong Kong, I'm not sure what this is. Hong Kong flat out giving out over $1,200 in cash to each citizen.
So I wonder what is that for?
Well, as you know, everything's made in Hong Kong, right? So I wonder if that is to, I don't know, because they're probably losing money if they're not coming in.
Well,
not sure. But the other thing that I thought was how it leads into the economy and everything is the Fed Vice Chair, Richard Clarida, number 2 guy at the Fed, basically said the U.S. economy and monetary policies are in a good place right now, noting that it is still too soon to speculate on whether the coronavirus will lead coronavirus.
Is that a combination of SARS and Corona?
Will lead to a material change in the U.S. economic outlook, and assured the markets that the Fed is closely monitoring the outbreak. He also said that as long as incoming information remains broadly consistent with the Fed's outlook, the current stance of monetary policy will remain appropriate. Although he did admit that a disruption from the virus could spill over into the global economy, as I was saying, even if such has not yet been seen.
So what they're saying is, if this impacts the markets locally, the Fed's prepared to make a cut.
Right.
And if the Fed makes another interest rate cut, remember, that is a short-term.
That is the Fed cutting rates, not mortgage rates.
That's prime.
Right.
So if you have a home equity line.
Overnight lending rate, banks to each other.
If you have a home equity line, that could lower that if they do cut it. But right now, they're not looking to make any cuts based on it. But if it definitely impacts it.
Yeah, we're in a good place right now.
Make no mistake, they will cut that short-term rate like that, maybe have a special meeting because they want to stimulate the economy because that's a proven way to do it.
Exactly.
Yeah, in fact, our current president has pushed to make sure we cut that short-term rate as many times as possible. Obviously, it's an election year, and he wants to
They are
show
definitely going to try and keep the rates down. So,
they want to see a strong stock market. They really do.
We, of course, recommend you speak with your financial advisor or whatever,
Absolutely.
your accountant or whatever, but the rates right now are really low. They are very good. It is a good time to consider refinancing. Take a look at your figures and stuff. See if you do want to do any home improvement. It might be a good time because the rates are low right now.
You know what? Easy way to think about that if you want to consider it. If you don't want to call your mortgage person, if you're too scared that they're going to try and sell you hard. I mean, I know we don't, but
no.
Think about this. If either you can do a no closing costs, which to me rarely makes sense because you pay a higher rate for that.
Right.
If you're staying in the house long term, okay? But if you pay the closing costs, it typically gets tucked into the loan. Do the math. If it's going to cost you $3,000 to close on that loan, how many months of your savings is it going to take for you to recoup that? If you're going to stay there longer, then maybe it makes sense. Take a look at it. People always say, "Well, I'm probably moving next year," and they don't. I mean, that. They all have, I'm buying a bigger house next year. Okay, you've been saying that for like 5 years. You're moving, yeah.
And another myth, while we're mentioning that, there's no such thing as no closing costs.
There really isn't. You're paying for it one way or another.
You're paying for it one way or another, only because people have to get paid for their job. The title company does a job. They don't work for free. So if some people are telling you there's no closing costs, that just means they're rolling it in somewhere. They're putting it into your interest rate. They're putting it into your loan. Somewhere along the line, it's getting in there.
Yeah.
So
yep, it's in there.
Just for what it's worth.
Like it or not. So you know what? Call somebody, get a rate, and the rates you see as we talk about.
Whatever you do, be be careful with it, because there's a lot of people out there just trying to slam and whatever.
Yeah, you'll get a mailer or something.
Yeah,
and that mailer says, "Oh, I can get 3%."
We're talking to somebody in Albuquerque, New Mexico, who has no idea what's going on here in Florida, and just.
Well, and the other thing is, there's different things on rates. What's going to affect it? Are you getting cash out? Do you have an 800 credit score?
Yes.
Over a 780.
All of those things are the things
What's
that
the
affect
value of the
interest rates.
property?
I had somebody call me yesterday and said, I need to know what the rate is. Well, there's no such thing as what the rate is. There's so many factors that go into determining what the rate is. It's not just, I have excellent credit. That's great. But are we talking a single-family house, a duplex, a manufactured home, a condo?
What's the value versus what you own?
Exactly. How much is it worth versus how much you're looking to borrow?
Just tell them you heard and you saw it online.
Interest rates are 2.
They're 2. They're always 2. When you call us, they're 2.
We always say 2.
But
2%.
Now, can you get 2? No. You're going to have to pay for it. You can buy it down.
You can get 2. It might cost you $1 or 2.
Yeah, I know. All right, so let's talk about what's going on in the community right now, because
we've exhausted rates.
Yeah, I'm over this.
But if you guys have any questions, by all means, feel free to reach out to us. We are happy to ramble on more about rates.
We got in the markets. I know we got March the 7th coming up with our favorite charity. Is going to be the host for it at Seven Springs Middle School.
West Pasco Business Association,
yes,
he means, not Seven Springs Middle School, but they are a very good school.
Yes, and we're supporting them and helping them with our charity.
Taste of Trinity.
Taste of Trinity. It's on Saturday, March 7th. If you go on WPBA.biz, www.wpba.biz, or .rocks, you can sign up for that. There's vendor spots. Tickets are very affordable. To
and you can come
to the event and you sample all the food and meet a lot of great local businesses by doing that. So that's coming up. Don't miss it. And
Lunch
also,
and Learn.
Lunch and Learn's coming up. Our next one's going to be great. It's
for all of our realtor partners out there, or even if you're
only.
not a partner who has done business with us, you're still welcome. If you're a licensed real estate agent, we would love to have you.
Active
you must have an
licensed
real estate agent.
Means you could do
we
a house.
would love to meet you. So come on over. It doesn't cost you a dime. It's on March 10th. It's at Carrabba's.
Yep, and you can...
in Port Richey.
Our website is closemyloantrinity.com. You can find us on Facebook, send us an email. Let us know you're coming. We have a great crowd. We have a great speaker this month.
Do let us know you're coming, just so that the servers at Carrabba's don't
yeah, so we can give you
kill
food.
us.
Jenny Sieg will be our speaker. She's a local estate, very respected estate attorney.
Estate and probate and such, and she is amazing.
She's good. She does a great job.
We've had her speak before, and she is one of the most requested ones that we have.
Yes, absolutely. So it's been a couple of years. So.
No pressure, Jenny.
Yeah. Yeah, you better be good, Jenny. You watch our show. So anyway, thanks for watching our show, everybody. Get us out there, share it, like us.
Thank you, everyone. We are Today and Every Day.
Moving forward.
See you next week.
Have a great week, everybody.